Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. It's market update time. Yes, we'll be bringing you the latest on the house prices, some really interesting news on mortgages, stuff that you won't expect. And Rob and I completely jeopardise any chance of the government coming on to our podcast as we, unfortunately, have to rip them apart once again.
Welcome to the Property Podcast, where we take time out from spending all day, every day on the coalface, on the front lines of property, doing hundreds of deals every year to bring you some of the knowledge and some of the insights that we picked up along the way for free. This week, we're covering all the big headlines from over the last month, combined with our own insights. And do make sure you stick around to the end for Hub Extra, where we've got a very, very strong recommendation for you.
We have so much news to bring you, but before we get going, just a quick reminder about Property Hub Select. We've confused a few people in the past of what Property Hub Select is, so I think it's useful to clarify here on the podcast where most of you listen. Property Hub Select is a service, or an add-on if you like, for clients of Property Hub Invest and Portfolio. So all those wonderful meetups, the amazing masterclasses, all that stuff that we offer on top for free is given to you with no catches if you become a client of Property Hub Invest or Portfolio. So they are the two ways in. So it's great. We are absolutely loving the feedback. We are about to do our first meetup, which is the first one in years. So that's super cool. If you'd like to find out more about our services and Property Hub Select, then go to propertyhub.net/select, and then you'll get all the details on Select, and you'll find out whether the services we offer are suitable for you as well.
Let's get into then our market update for the month of August. And we'll start, as we always do, with house prices, where really, Rob, there's not much new. We've got all the latest data in. Nationwide is showing prices down 0.2%, and Halifax is down 0.3%. So really, this is a continuation of what we've seen over the last few months, a very, very slow drift downwards. But it's so hard to figure out what the path forward looks like because it's so dependent on mortgage rates. And the way people feel about rates is changing month by month at the moment based on the inflation data that comes out. For example, there's also a monthly report that comes out from the Royal Institute of Chartered Surveyors, and that had been getting a bit more positive month on month. Last month, that swung dramatically to the negative, but that data came out before the most recent announcement around inflation and the base rate, so I wouldn't be surprised if that swung back more positive again next month. So in this market, it's so hard to get to grips with what's going on.
I think the reality is not a lot. Nationwide down 0.2%. It's barely worth reporting on. And actually, to be fair to the media, who we have bashed in the past, they have been relatively balanced on the reporting of that data, except, though, for a few who went out with biggest falls in 14 years, which is technically true and sounds much more dramatic than 0.2%. But you have to remember that the last time we saw sort of any meaningful negative downward movement in the property market was back in 2008. So I suppose 14 years is technically true, but the reality is it's down 0.2% over the last month and just shy of 4% over the last 12 months. So it is very much a gradual easing, and it's far from a crash, and the crash that many predicted doesn't seem to be playing out at all. And the way things are going, I'm not sure it ever will play out. We've got the silent property crash, which we've talked about, and when you look at things in real terms, that's absolutely fascinating. We've podcasted on that. Rob's done a YouTube video on that. Highly recommend you either go and watch or listen to that podcast, because that is so important to understand. It will really help you make better decisions and feel probably a lot better about what is going on. But I think, Rob, that yes, there's a lot happening out there, but in terms of property prices, not a lot is happening. And I can just see a continuation of what's happened over the last few months happening for the next few months before we get any change of direction. And I think the change of direction, when it does change, won't be more aggressive falls, but will actually be starting to slowly tick back up again. We will see. That sounded like a prediction there I've just given. Don't know if I should have done that, but there we go.
Yeah, you want to be careful about those. But yeah, I think more of the same is the most likely outcome for the next few months. Anecdotally, something I've heard from a few different places is that the stock that is on the market is rubbish. So, of course, no one likes to sell into a weak market or a perceived weak market. And of course, the media has been full of disastrous predictions about what's going to happen to the housing market. So people don't need to sell, they just won't. As a result, most of the stock that's on the market is either probate sales, so people have died and those properties tend not to be in the best condition, and landlords who are selling up, either because their costs have gone up dramatically because of interest rates or because of nervousness about the renters' reform bill. So most of what's actually up for sale isn't very good. Therefore, when something comes up that is actually of a decent standard, there's a load of competition for it, even though demand is lower as well. And that might be one of the factors that is supporting prices. Because you'd expect, with rates going up as much as they had, house prices would fall more significantly. That's why the apocalyptic predictions have been what they are. But not just the lack of stock, the lack of quality stock could be a factor behind why prices are just drifting down so slowly.
And something else that I've witnessed over the last few weeks and months is that this is very, very regional dependent. So you've got regions that are actually quite resilient. So we talk a lot about Manchester, and I promise I'm from Liverpool, so I've got no reason to keep building up Manchester. But there was a major developer in Manchester recently who released their latest development off plan, and it's pretty much sold out in months. The build is going to go on for years and it's already sold out. Rents are going through the roof in Manchester, seeing some of the biggest rises in the whole of the country. Then speaking to someone only in the last 24 hours, they've got property in Kent, new build that they've developed out, and they just can't shift it. They've reduced the price by a significant amount and they still can't seem to get it away. So much so that they're looking now to rent it out for a few years and then bring it back to market. I've got a friend who's just purchased a property in the Midlands and has paid over asking price for that property because it's in an area that people want to live. So the market is all over the place depending where you are. You know, if you live in a certain area of Kent, you might think the market is on its knees and is about to crash. If you live in the Midlands, then you might be thinking that property is quite resilient. And if you're trying to buy a new build in Manchester, then you're thinking the market's red hot. It really is a fascinating market. The country is not uniform in how it's behaving, certainly when it comes to property. And that for me is really underreported. Of course, when you look at these figures, house prices down a tad or rents up a certain amount, it's looking at a national level. But there are so many stories within that data. And for me, that's where the real interest lies.
Yeah, absolutely. And that's why being able to get beneath the headline data and getting these data points from around the country like we are is so useful in building up a picture of what's going on. Let's move on to mortgages next. And the latest Bank of England data is out showing that both mortgage approvals and net borrowing are up again. So as you'd expect, mortgage approvals are significantly down on where they have been in the past. And there was even a month recently where net borrowing was negative. In other words, more mortgage funds were being paid off than taken out, which is highly, highly unusual. In the last month, that changed. So net borrowing is positive again, and more mortgages are being approved. Is that because people are now just accustomed to these rates? The panic is over and they're starting to act again? Or is it to do with people switching or refinancing with rates coming to an end and wanting to lock in a rate before they potentially go up even further? Who knows? We'll have to keep an eye on that one. But something else that's happening, Rob, is that we're seeing rate cuts from multiple lenders, including the Mortgage Works, which is the biggest buy-to-let lender, making some fairly chunky cuts. And that comes in the light of some messaging and expectations around interest rates that came out last week.
Well, and really interestingly, with interest rates going up, so you would expect, okay, interest rates have gone up again, so all the mortgage rates are going up. But that hasn't happened. And we talked about this on our Property Hub Select social media group. And I left a voice note there for the group. And what I was saying is people immediately think, okay, so interest rates have gone up, so will all the mortgage products. And yes, if you're on a variable, then it will go up. But fixed rates have come down. And the reason for that is because what happened met market expectations. So the market expected interest rates to move up by 0.25%. And it was accompanied by news that inflation was falling. So because the market got certainty and the medium-term view is that inflation's going to keep falling, the longer term fixed rates have started to fall down because their borrowing costs are coming down. So it's really interesting that people automatically assume an interest rate rise means more expensive mortgages. But no, actually, because of the certainty and some good news around inflation, it's meant that rates have started to tick downwards. And if that continues, rates will continue to get more and more competitive as well, particularly over the 5-year and 10-year fixed periods.
Exactly that. Expectations of peak rates are now, I think, somewhere in the fives, whereas before they were somewhere in the sixes. So that's changing the products that lenders are coming out with. I've said it before, but I don't think we're going to see dramatic moves downwards in rates. But if things continue to go in the right direction, we should see lenders start to regain their confidence and be able to move rates down further. But that is a big if. So next month's inflation data is going to be a really important one to watch. If you know anything about our service, Property Hub Invest, it's probably that we secure you exclusive property deals at a discount. But I now make all my investments through Property Hub Invest. And what I value most is actually the time saving and having the care team on hand to deal with developers, mortgage brokers, solicitors, all the things that normally cause so much stress and take up so much headspace. Property investment will never be effortless, but having the expert team at Property Hub Invest makes it so much easier. If you're interested in finding out more about Property Hub Invest, just go to propertyhub.net/invest.
So moving on to the rental market now, and we've already touched on it already, and it is no surprise that rental competition continues to intensify. And the BBC have reported on Rightmove data, which shows that the number of requests for each home that is being let right now has more than tripled since 2019. That actually doesn't surprise me based on the more recent news that we've been bringing you. And rents are crazy in particular areas. So the rents in some regions are rising modestly, but in some other regions, they are just going through the roof. And Manchester is showing annual rental growth of 22%, which is absolutely bonkers, and Birmingham at 18%. Now, it feels like every week there's been data released on all these cities and how much they're going up. And the story here isn't who's necessarily topping the table. The biggest takeaways are that this doesn't seem to be stopping. Like in certain areas, yes, the growth has certainly cooled down. London, definitely. But in other areas, it's just kicking on. And as investors, when you look at this, you go, okay, well, my interest rates may be increasing, but my rent is also increasing. People talk about interest rates and moan, but don't take into account that their rents are going up. Now, of course, on your residential property, you don't have the rent coming in. You already have your mortgage increasing. So I can understand where the pain is felt there and why you would choose to moan. But as a buy-to-let, yes, mortgages are more expensive than they were 12 months ago, but depending on where you buy your property, the rents could be 20% higher compared to 12 months ago. And that number continues to tick up, where mortgages now have seemed to start to settle down. It's really, really interesting. I don't know what is going to happen with the rental market. It just seems crazy. But the fact is, there's a supply and demand imbalance, and that is what is driving this. And unless the government can do something to encourage landlords back onto the market or somehow bring more rental stock to the market, this isn't going to go away in the short term at least. And the thing is, I can't see any government, whether it's this one or a Labour government in the future, suddenly incentivising landlords to enter the market. I mean, strange things have happened in this world over the last 5 years, but the government supporting landlords to bring more rental stock to the market, I mean, I think that's going to be beyond anything else I've seen in the last 5 years, but never say never.
That's incredible, isn't it? It's sort of ceased to be news because we've been reporting on similar things for such a long time now. But if you take a step back and you look at how much rents have increased by, you look at how much demand has gone up by, it's absolutely crazy. And there are no quick fixes. If you have more people wanting to be into the rental market because they're not able to buy or not willing to buy with things being as they are, if you've got the population going up dramatically, as it did last year, you're going to need more homes, and you can't just produce them out of thin air. So this pace of growth has got to slow down at some point, but this dynamic is one that I think we're going to be living with for quite a long time. Let's move on to a few things that are happening on the political side of property investment, and starting by talking about holiday lets and Airbnb, because that is an area that is genuinely removing supply from the rental market. If people move between renting and owner occupation, it changes the balance but not the numbers. But if you have properties turn from lets into holiday lets, then that does shrink supply. And in some areas of the country, this is causing a problem. So there's a consultation that has opened about licensing around short-term lets in terms of standards and potentially in terms of restricting numbers of holiday lets in certain areas. I said a year ago that I thought this would be a focus area for the government and we'd see more political pressure. So far, that hasn't been the case. There's been one or two other things going on that's been keeping them busy. But this story shows that rumblings are underway again. So if you are involved in holiday lets, this is one to keep an eye on. And Rob, a suggestion from Arla, which seems extremely sensible to me, is look, have a national framework, have a national set of standards, but allow local authorities to opt into that if they want to, rather than imposing it on everyone. So in areas where there are a lot of holiday lets and it is potentially becoming a problem, they can have licensing and regulation. But in areas where it's just not an issue, they don't need to bother with it. Seems very sensible to me, which means it probably won't happen.
No, it may not. But I think what needs to be accepted by our listeners who operate in holiday lets is regulation. If it happens, it's getting to the point of now when it happens. Regulation will come. How much? Who knows? But it will come. Having it regional makes a tremendous amount of sense, and being able to adapt what happens in different areas, because some areas are struggling because of the volume of holiday lets in that area, whether it's changing areas for local people or the amount of housing stock that's available for long-term lets. There is definitely some upsides to bring holiday lets to an area and it can boost the local economy, but there are also downsides. So regulation will happen. And for me, it is a when, no longer an if.
And something that I think is actually an if rather than a when is the government's long-term plan for housing. Judging by how the next election is looking, I think having a long-term plan for housing might seem a little unnecessary. Short-term would probably do fine. But they have nevertheless released their long-term plan, which I think boils down to a couple of things. One is specific plans to regenerate particular cities. It said that there will be 20 of these, including areas of East London, Cambridge, and inner city Leeds. And the other part is attempting to get more building going on across the country, specifically increasing density in urban areas, and making it easier to obtain planning permission on brownfield sites rather than just going and building whole new developments in random bits of the countryside, which kind of makes sense to me in terms of where people want to live. Will any of it happen even if they stay in government? Who the hell knows? My favourite bit though, Rob, is that apparently they will be establishing a new super squad of planners to fast track big applications. And they've only allocated 13.5 million to that, which is absolutely nothing in the scheme of things. I just like the idea of a super squad. I like the terminology. I think we should get a super squad of our own.
Yeah, at least it makes it a little bit more interesting. I mean, the amount over the years on this podcast we've heard the government say they're going to deliver and then actually seeing what is delivered is farcical. You may as well get J.K. Rowling to write the government's long-term plan for housing. At least it'll be more entertaining. Although the super squad, I do commend the effort there to make it a little bit more interesting. Someone's got a little flair for creative writing, and that's quite nice to see. What is also nice to see, Rob, is the government's investment in border forces. It's been well under-resourced. They're putting lots and lots of money into it. Oh, no, sorry. I've read another piece of fantasy. No, in fact, the government's not doing that. What they are doing is making landlords become the border force. And to motivate them, they're going to dish out fines if you allow an illegal migrant to rent one of your properties. So, yes, you've had to check for that already, but they're going to ramp up those fines because the government obviously can't do the checks. So, as landlords, we'll have to do them for them.
Yeah, absolutely nuts. The maximum fine going up from £1,000 to £10,000. And I just don't get it. Because no one's going, I'll just let someone illegally live here. And even if I have to pay the fine, it's still worth it. No one's doing that. People are either not aware of the checks they're supposed to be making, or they're trying to do it and doing it badly because it's really confusing and complicated, or they are criminal gangs who specialise in renting substandard properties to people who don't have any choice, and they're not going to be deterred by any amount of fines. So I don't know how this is supposed to help. I, as it sounds like you do, object to having to do the border forces job for them anyway. Seems a bit late by that point. But I suppose it allows them to talk tough and appear harsh on illegal immigration and landlords at the same time, which is a double political win, isn't it?
Yeah, and with these increased fines, we can get that super squad. So at least there might be some upside. No, there probably isn't. Never mind, we were hoping for the government to support landlords to bring more rental stock to the market, but it seems they just want to make things harder for us. Oh well.
So that is everything you need to know about what's going on in the property market at the moment. But before we finish the show, we always like to bring you that little bit extra in the form of Hub Extra, an extra resource or tip or tool for you. And Rob, you brought a book along this week.
Not any old book, Rob. At the end of each year, we name our favourite books of the year. And I can tell you now this book will be making the list because this is the best book I've read this year. This has been one of those books that I just find time for. And I actually listen to this book, so I normally have a physical book on the go and an Audible book. And I'm so glad I did this book on Audible because the narrator is absolutely fantastic. The narrator does such a good job with this that I found myself going for walks. Like, the dog got extra walks because of this book. It was absolutely brilliant. The book is called Red Notice by Bill Browder. I don't know why I picked this book up. I think it was because it was just recommended to me on Audible. Audible started doing that now. It starts to give you books that it thinks you'll like. After reading some reviews, I thought, why not? Let's give it a go. And it's absolutely fantastic. I don't know how much I want to say about the book, but I appreciate you'll need some details to decide whether it's for you or not. But Bill Browder started up an investment fund in Russia just as the Iron Curtain fell. So as communism ended in Russia, not so long after that, he launched a Russian fund. And his experience over there was just fascinating. The first half of the book really focuses on his story and the opportunities that he had there, but also a background into the corruption in Russia and also the background of the oligarchs, which is super fascinating stuff. And then the book moves on to a more human rights note and his determination to find justice for a huge injustice. I don't want to say any more than that because this book is so good. I just want you to enjoy it and just trust me. Like, if you've picked up any of the books that we've recommended before and you've enjoyed, well, trust me, you are going to enjoy this book. I'd recommend that you go for Audible if you do have an Audible account, but I'm sure the written version will just be as delightful. An incredible book, an incredible story. I learned so much from this book. I was entertained, I was upset. It had it all. Wonderful book.
Well, there you go. Do yourself and your dog a favour and pick it up. But make sure, even if you do listen to it, you find time to squeeze in the Property Podcast next week because we've got another great episode coming up. And if you're not already, do make sure you're following the show on iTunes or Spotify to make sure every episode gets downloaded directly to your device every Thursday morning. But until next time, have a great week. Bye-bye.
Bye-bye.